What's up, Bitcoin Bulletin crew? Get ready for a rapid-fire crypto update that's about to blow your mind. First up, Bitcoin is absolutely crushing it, topping $114,000 as traders are laser-focused on the upcoming U.S. CPI data. Everyone's watching to see if this inflation report will finally give the Federal Reserve the green light for those highly anticipated interest rate cuts. This could be the catalyst we've all been waiting for. Next, we're diving deep into Bitcoin's Choppiness Index, which is climbing to levels not seen since major bull runs. Analyst Checkmate is calling it. This metric, that gauges sideways price consolidation, has been at multi-year lows, but the recent surge suggests a potential breakout is looming. Could this be the calm before the storm that leads to another massive price surge? Then, get this. Namecheap just pulled off a jaw-dropping $2 million domain sale, and guess how it was paid? You got it, all in Bitcoin, using a self-hosted BTCPay Server. This massive transaction showcases the power of Bitcoin for high-value deals and highlights the growing adoption of decentralized payment solutions. We'll break down how this landmark sale went down. And finally, even as Bitcoin consolidates below $113K, institutional bets are growing bigger. We're talking about firms like Metaplanet Inc., raising billions to expand their Bitcoin holdings, drawing parallels to MicroStrategy's strategy. Analysts explain why these whales are doubling down despite the choppiness. Don't go anywhere. Make sure you're subscribed and hit that bell so you don't miss any of these explosive updates. Bitcoin surges past $114,000, fueled by rate cut hopes. Bitcoin is making waves, soaring past the $114,000 mark as traders eagerly await the U.S. Consumer Price Index, CPI, report. This crucial inflation data is expected to provide significant clues about the Federal Reserve's next move on interest rates, with many anticipating a potential cut. The European Central Bank's own rate decision is also on the horizon, though it's widely expected to remain unchanged. Economists predict a modest increase in the U.S. CPI, which, combined with recent strong job revisions from the Bureau of Labor Statistics, is fueling optimism for rate reductions. Market sentiment is already reflecting this, with betting platforms like Polymarket showing a 79% chance of a 25 basis point cut this month, and the CME's FedWatch tool echoing this sentiment with high probabilities for a cut. This potential shift in monetary policy is a major tailwind for risk assets like Bitcoin. In fact, spot Bitcoin and Ether ETFs saw substantial net inflows yesterday, totaling $928 million, pushing Bitcoin to its highest price since early August. However, not everyone is entirely bullish. Jake Ostrovskis, head of OTC trading at Wintermute, has raised concerns about stagflation due to persistent inflation and slowing growth. He notes a shift in investor preference from Ether back to Bitcoin, evidenced by options activity where traders are buying puts on ETH. Ostrovskis suggests the market is becoming well-hedged, positioning for a potential easing of pressures as a rate-cutting cycle approaches. Meanwhile, the Bitcoin-to-gold ratio is approaching historical resistance levels that have previously signaled crypto bottoms, according to analysts at QCP Capital, hinting at a potential setup for another major upward move. Adding to the geopolitical tension, Russia's violation of Polish airspace this week has heightened global alert levels, though Polish Prime Minister Donald Tusk has downplayed immediate war concerns. Stay vigilant as these global events unfold. Don't go anywhere, because the market's Choppiness Index is flashing a surprising signal that could precede a massive breakout. Bitcoin's Choppiness Index hits new highs, signaling potential breakout. Bitcoin's price has been consolidating in a tight range, but a key metric is signaling that this calm might be short-lived. Analyst Checkmate's Choppiness Index, which measures sideways price consolidation, has been climbing steadily. This index has remained at multi-year lows, mirroring Bitcoin's recent range-bound behavior between $110,000 and $124,000, with the current price hovering around $113,000. The Choppiness Index has now risen to 54 on the one-month timeframe, according to Check and Chain. This level hasn't been surpassed since early November 2024, just before President Trump's election victory spurred a significant Bitcoin surge to over $90,000, where the index peaked at 64. The previous instance of such elevated choppiness was in early 2023, at the dawn of the current bull cycle, when the index stood at 57. This historical pattern suggests that further consolidation is possible, especially as volatility continues to compress, but it also strongly hints at an impending breakout. The upcoming U.S. Consumer Price Index, CPI, release at 12:30 p.m. UTC is identified as the next major macroeconomic catalyst that could trigger this volatility breakout or a significant directional price move. Bitcoin Bulletin research from February also noted similar prolonged periods of consolidation that preceded a notable price decline, which eventually found a bottom in April around $76,000. However, the current Choppiness Index readings, combined with the anticipation of macroeconomic events, point towards a potential upside move. This sustained period of low volatility and high choppiness has captured the attention of traders and analysts alike. The market is keenly watching for any signs of a decisive move, with the CPI data poised to be the catalyst. The historical correlation between high choppiness index readings and subsequent price surges makes this a critical development to monitor. But that's not the only big news. We've got a record-breaking domain sale that proves Bitcoin is ready for prime time. Stay tuned. Namecheap achieves landmark $2 million domain sale, paid entirely in Bitcoin. In a significant move for digital commerce, Namecheap, a leading domain registrar, has successfully completed its largest-ever domain sale, a staggering $2 million transaction settled entirely in Bitcoin. This milestone was facilitated by the Spaceship Seller Hub platform and utilized a self-hosted BTCPay Server for the payment processing. BTCPay Server publicly acknowledged the achievement, congratulating Namecheap and its CEO on the successful $2 million Bitcoin payment via a self-hosted solution. Namecheap CEO Richard Kirkendall confirmed the deal on X, highlighting it as their largest-ever domain sale on Seller Hub. He revealed that the domain in question is a highly sought-after one-word English com, though its identity remains undisclosed. Kirkendall emphasized the speed of the transaction, noting that the domain was transferred and the wire payment was sent to the seller all within a couple of hours, a testament to the efficiency of their setup. This transaction powerfully demonstrates Bitcoin's capability for high-value transactions, especially when integrated with robust, self-hosted payment infrastructure like BTCPay Server. It underscores the growing practicality and adoption of Bitcoin for substantial commercial deals beyond everyday purchases. Simultaneously, BTCPay Server, in collaboration with Bitcoin infrastructure firm JAN3, has launched the Samrock protocol. This new protocol aims to simplify Bitcoin, Liquid, and Lightning payments for merchants by replacing complex manual configurations with a user-friendly QR code handshake between wallets and BTCPay Server, allowing merchants to retain custody of their funds. The $2 million domain sale serves as a concrete example of Bitcoin's expanding role in the digital asset economy, particularly in high-value sales like domain trading. The introduction of tools like the Samrock protocol further lowers the barrier to entry for businesses looking to adopt Bitcoin payments, potentially accelerating wider merchant adoption and solidifying Bitcoin's position as a viable payment solution for significant transactions. And get ready for this. Even as Bitcoin consolidates, institutional investors are piling in, betting big on the future. We'll tell you why next. Institutional bets surge as Bitcoin consolidates below $113K. Analysts reveal the strategy. Despite Bitcoin trading in a tight range below $113,000, institutional investors are reportedly increasing their bets, signaling strong conviction in the cryptocurrency's long-term value. The leading digital asset has been consolidating, moving between $110,812 and $113,138, with key momentum indicators showing support at $110,000 and moving averages reinforcing a bullish case. The immediate resistance lies between $113,000 and $115,000, a breakout above which analysts believe could ignite renewed momentum. Market watchers attribute this sustained institutional interest to growing expectations of U.S. Federal Reserve rate cuts, driven by recent weaker jobs data. This macroeconomic outlook provides a stabilizing force for Bitcoin. Furthermore, consistent liquidity, inflows from crypto ETFs, and strategic corporate treasury allocations continue to fuel demand. A prime example is Japanese firm Metaplanet Inc., which recently raised $1.4 billion to bolster its Bitcoin holdings, positioning itself as a key proxy play for Asian investors. Analysts are drawing parallels between Metaplanet's strategy and MicroStrategy's long-term accumulation approach, highlighting a clear institutional commitment. While some data points, like Fidelity's spot Bitcoin ETF seeing outflows, suggest short-term caution among certain investors, the broader trend of institutional accumulation points to confidence in Bitcoin's role as a hedge and a long-term store of value. Analysts remain cautiously optimistic, citing accumulation patterns and resilient demand as precursors to Bitcoin's next significant upward move. The ability of Bitcoin to attract substantial long-term institutional investments, even amidst market uncertainty, is seen by many as the clearest indicator that a major price discovery is imminent. That's all the breaking news for today, but stick around for a super fast recap and our full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin surge past $114,000 on hopes of Fed rate cuts. Its Choppiness Index is flashing green for a potential breakout. Namecheap pulled off a massive $2 million domain sale paid in Bitcoin, and institutional investors are doubling down even as prices consolidate. If you haven't already, make sure you're subscribed to Bitcoin Bulletin, hit that notification bell, drop us a comment below with your thoughts, and follow us on all social platforms for more crypto insights. We'll see you next time.